not winning 90% of your new business because you have some sort of incredible value.
I'm going to take a bit of a different angle.
I've got a budget this big. I'm going to give it to you because you have a really killer plan.
You give a Red Bull to a turtle, what do you expect?
I think that's a dead turtle. So let's move on to...
E-Rig.
Cheers.
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 Does your current premium finance company lock you into long-term agreements? That's because they don't want you talking to us. At IFS, we win your business the good old-fashioned way, with customer service. I know you don't always have to use a premium finance company, but when you do, you should use IFS. Cheers.
Hi there, and welcome to another episode of the Digital Insurance Pint podcast. I'm your host, Tom Reed, and I'm joined by my co-hosts, Steve Earle, CEO of Cheap Insurance.
G'day.
Jeff Roy, CEO of Excalibur Insurance.
How's it going?
And Adam Mitchell, CEO of Who Cares, because he's not here. Don't know where Adam is, but we are pleased to be joined today by Josh Reznick from Foxquilt. Josh, how's it going?
Good. How are you, Tom?
Doing pretty well, thank you. So before we get into our discussion with Foxquilt, I just do want to do a quick shout out to our sponsors, our premier sponsor, IFS Premium Finance, the Crew Group, and as well as WIC, our charity partner. Thank you very much for all you do to support the show, guys. So Josh, maybe we'll start, just do a quick, maybe a short bio on yourself, and then we're going to get Jeff to dig into that. So over to you.
Sure. Thanks, Tom. So I'm Josh Reznick. I'm the VP of Partnerships at Foxquilt. Spent my entire career in the insurance world. Spent 10 years at Aviva, where I actually met all of you. So that was a great journey. Yeah, no backstories, but it was a great journey spending a large portion of my career there, mostly focused on business development, product development, and then leading the group home and auto program. And then I actually met Mark and Karim, who are the founders of Foxquilt at Aviva, and they came knocking probably about a year ago. I always wanted to do something a bit more entrepreneurial and join a startup or growth company environment. And the opportunity presented itself. So I took the shift. So really enjoying that. Outside of, the insurance world and Foxquilt, I was mentioning to Steve earlier, play rugby. So big into sports, rugby, golf, hockey, and spending time with wife and my dog, Josie.
We're just doing the rapid fire, and Josh pretty much answered all my questions for me, so he already read into it. But we got a few more for you, Josh. So really good to see you. It's been way too long, my friend. We always let's start off with us true Canadians. Who is your favorite Canadian band of all time?
Canadian band, Bryan Adams.
Bryan Adams. All right, that's a popular choice.
I saw him in Hamilton. It was pretty good. Good show.
Right on. And now, what's your favorite drink? Insurance, you almost have to drink. This is a Digital Insurance Pint podcast. All our listeners just want to know what's in Josh's fridge and what does he like to pound back when he has a few spare minutes?
So fridge, I guess it'd be like an average lager, so like a Creemore. And then outside of beer, like really enjoy red wine now. So, a good Pinot Noir or maybe a cab with a steak.
Awesome. Now that we're back getting away and traveling and COVID, nobody's really remembers even going through it. Where's the one place you want to travel?
I think we were saying Switzerland would be up there. So probably best scenario would be the World Juniors. We're present in Switzerland and doing it there, or maybe not. If not that, Davos has that championship every year in December, so that would be pretty cool too.
How's your yodeling? You pretty good at yodeling, or what?
It's like a medium game right now, but we can work on it. Yeah.
Okay. And you an iPhone or Android user?
iPhone, always. Yeah.
All right. That's a good answer. Right answer. Yeah. And then besides Foxquilt, who's your favorite insuretech or tech startup of all time?
That's a tough one. I think being at Foxquilt and learning a little bit more, I appreciate what Next is doing in the US, and then I think Cover Genius is doing a pretty good job with the embedded play.
And one last thing, with all your experience in the insurance industry, what's one tip you'd give to somebody new entering the industry?
Learn the basics first. Spend some time, in a role that's going to teach you underwriting, product, areas of distribution, and then kind of take your career from there. Because if you don't have the basics, you're going to struggle, I think, to really grow.
All right, great, Josh. I'll let you off the hook and I'll pass you back to our leader, Tom.
Awesome. Thanks, Jeff. All right. So, Josh, Foxquilt, why don't you, we heard all about Josh. Let's hear about Foxquilt. Why don't you give us the elevator pitch?
Sure. So Foxquilt, we classify ourselves as an insuretech. We're focused on small business predominantly, so making the lives of small business owners easier through access to technology and technology-powered insurance solutions. And I would say, we call ourselves a true insuretech in that we have two distinguished arms of the organization. We have FoxDen, which is our technology. So that's our platform that's built full stack, kind of front, middle, back. And it's built on a suite of APIs, or not to get too technical, but we call microservices. So that's really what drives everything in terms of our distribution, linking in with partners, open API access, super important. And a lot of the guys here are way smarter than probably us collectively in terms of our engineers and technicians. They're pretty impressive. So that's the first arm. And then the second would be Foxquilt, which is our distribution arm. So that's where we have manufactured product with a partner to kind of release out into the marketplace through a bit of an omni-channel experience. And the goal is to build products with our backing partner, but then also add on some frill products or add-ons through APIs and reaching out to carriers or other, an MGA to bolt on.
I mean, one of the obvious questions that sticks out to me is, how are you guys distributing? As far as, are you going through brokers or direct to the businesses?
Yeah, it's a good question, Adam, and we get it a lot. We're very open and transparent with what we're doing on distribution. So we call it omni-channel in that we have multiple channels. So we do have a D2C direct to consumer arm that's allowed us to test out the technology, build product. We're active through Google networks and through other social networks to have some direct to consumer business. We have enterprise partnerships, so that's where we're going after clusters and trying to digitize that experience for B2B networks. And then, our third and very important distribution arm is brokers and agents. And I mentioned agents because we're operational in both Canada and the US. So I think the main thing here is that we're very open and transparent with our distribution. We want to be where customers are. So we see the value in being, have a D2C, but we definitely see the value in if a customer wants to be within an enterprise experience, or if they want to be serviced through a broker, we want to be present with Foxquilt products to allow that to happen.
A couple things quickly here. I want to unpack a few things. First of all, for our listeners, we'd like to understand, there's some people kind of in your space, we think, but we'd like to understand how Apollo, Bullfrog, maybe BrokerLift are different than what you are. And then on the pricing side, if you're omni-channel, is the pricing you offering directly different than what you offer the broker, or are they the same?
Yeah, good question. So I would say, first of all, adding more digital carriers, digital brokers, insuretechs is only good for the industry, right? I think when it comes down to bringing technology to the forefront. So for the ones that you mentioned, I think everyone's doing a great job in pushing that message and pushing that methodology. But I would say, Foxquilt is different in when I opened up and talked about the technology and really owning that from a full stack perspective, doing some research and seeing some of our other competitors out there. There's a lot of reliance on third-party technology, like a Guidewire or Duck Creek, or licensing out a policy admin system. So I'd say that's a big one in the sense that we're able then to connect in more readily with third-party distribution arms, with enterprises, and any change that we see within our flow, which we look at every day. So where customers are getting blocked or brokers are getting blocked within question sets, we're able to make those nimble changes. And we don't have to necessarily go and put in a change form request to a third party. So that's kind of the first one. And then the second piece is around the product. So a lot of our competitors, especially in Canada, will leverage, stock product that would be available through various brokers or distribution arms. We've built our own product with a partner in Munich Reinsurance. And what that allows us to do is also be nimble on pricing, have different elements that's really going to fit a small business customer, and release that, through our distribution arm. So leverage that with brokers, but have almost a select distribution on it. So it's not everywhere, rather it's where we want it to be.
So Apollo would have different companies coming in, whereas you've got Munich Re and you've built your own then, right? With your Fox's Den app to basically customize it to kind of differentiate between that. And same, Bullfrog has multiple companies. You've got the one where you've got control of the whole stack then.
Yeah, and I think with our main products, or our most important ones that we've manufactured, so those would be like our GL product and E&O. Those are what we have manufactured, but we're not against to bolting on additional products. So we have like a workers' comp add-on in the States. We want to do the same thing for cyber in Canada. And that's working with partners outside of potentially Munich. So we're not opposed to it. But I think the distinguishing factor is that kind of manufactured modular product that we've created.
Pricing the same?
Yes.
Yeah.
So just to answer that question, so in market right now, the price point is the price point. So you wouldn't get a different price going direct to consumer versus broker. The only change could be on a potential enterprise or program that would have almost a program rate. But I would say that's available both for enterprise that we do directly or for programs that we do with brokers, right? So that would be the only area that you might see a slight difference.
You came from a big insurance company. Any idea how big insurance companies are thinking about the reinsurance markets kind of shortening their vertical stack to go closer to the customer?
It's an interesting question. Like we're seeing some traditional carriers exiting out of small business, and focusing a little bit more on maybe their stock products or middle market or specialty. So if we're relating this question kind of directly to small business, potentially they're moving away from it because of these, reinsurance-backed insuretechs or super MGAs. But I still think that there's some carriers that are doing it right and well. It's going to be about offering, though, a product that is tailor-made and streamlined, and having like a BOP or a big policy pack for, a sole prop contractor is probably not going to work for them. So how do we evolve that?
We all know how long it can take a traditional broker carrier process to get a small business policy out the door.
Mm-hmm.
How does your process and compare to that?
Yeah, so I think when we say full end-to-end quote issue bind, it's very much that. So for the products that we have online and those that fit the appetite, you can get a quote price within 5 minutes. Fulfill through an embedded Stripe and DocuSign and be out the door in, call it 6 minutes with your policy, your certificate, and documents. So it's not a binder or it's not a promise to quote or price. It's the actual policy. So we're excited with the growth that we've seen, and the Canadian consumer starting to get there. It's taken a little bit of time, and then in the U.S., I'd say the tendency to buy online, search online, I think you guys have all been part of the think tanks and the evolution of digital brokers. The US is a little bit further ahead. So we are seeing that with the consumer, but it's been fun to watch.
Josh, I had a pre-canned question here about integration with commercial carriers.
Mm-hmm.
And so far, what I'm hearing is you're not doing that. You're manufacturing product and putting something out. So you've mentioned programs, quote unquote. So I'm a broker. I have a small program. Like, how do you help the average broker who might have a line on a particular industry? I've got a ton of widget makers. How does that work?
Yeah, so I would say the first question on like connecting in with carriers, we are starting to do that. So we have the ability to do that. I'd say our first one was working with a partner in AmTrust for workers' comp. So we have done the integration through their APIs and put other products on our platform. So that's been a good step forward to then iterate on that. With regards to brokers and programs, we would have multiple different ways to satisfy that. So based off the size of the program, if it was a vertical that you were focusing on and you had an association, it could be as simple as, a co-branded or dedicated landing page for that customer to fulfill, and you provide that digital experience. If it was a bigger program that would justify the tech spend, we'd be able to white label an offering. So that's where, the customer, the look and feel could be like your insurance brokerage, with Foxquilt obviously manufacturing the rate underwriting, the straight through processing. So we are having conversations with both brokers and agents in the US around that program style business. And then our technology has been built in a way that you can skin it, you can white label it, or you can potentially SaaS it out as well. So lots of really cool stuff.
So what's the minimum here? Like how much revenue, how much premium, whatever it is, to actually engage with Foxquilt does it take?
Yeah, so I think right now, like in the stage that we're in with broker distribution and agency distribution, we're looking for strategic partners that are selling in a digital fashion, or they have a need for technology to be able to quote issue bind, right? From a minimums, we don't really have necessarily something that's defined. Rather, it's more a fit. From a program perspective, I would say it needs to have some scale to be able to white label. So $1 million and up, I would say for sure to run a program and for it to justify a white label solution. But from a strategic broker angle in Canada, we're already speaking to, I think some of you, like Jeff and I have had some conversations. We're looking for brokers that are looking for solutions that are fit for small business, that can bring more technology to your offices and be another option to satisfy the needs of consumers.
Like, what if we flip this on its head for a second? And is there a chance that you are a fast prototyping for Munich Re's digital app or piece, and next they're going to have a Munich Re program and app for Jeff, and hey, here's the SLA, you have to have it filled out this way, and this what constitutes a bind? And
yeah, it's a good question. It's not something I think we've thought about too much or concerned ourselves around. The amount of like effort and work that goes into these partnerships with something like Munich is a lot, right? And they do require the technology to be there, the full stack to be there, integrations, premium goals. So I think I wouldn't see it as a widget style model where they're going to want to be everywhere, at least from what I've seen and had conversations with them about.
One quick question. I know we're kind of going a little off script here, but
that's okay.
The direct to consumer one you've got, the quote bind and issue it. Do you have people to reach out to go over coverages and talk to people on your direct to consumer arm, or is it a consumer just buying it and then they get what they get, or how does that work on your model?
Yeah, no, I think it's a really good question. And, what I mentioned earlier on the, especially the Canadian consumer, still not quite ready to fulfill completely online, especially for commercial. We do have multiple different avenues to explain the coverage. So we have, a chat system that's real live licensed brokers. We have something we call the Bob quote. So our head of SME is Bobby Sherwood, and he kind of mastered the Bob quote, which is a broker assisted bind. So that's when a broker would come in and help fulfill. So they might, a customer might get stuck on a question or not quite understand, or they've quoted but they've added a bunch of limits or coverages that they might not require, or we want to add on coverage for them. So we have avenues through that, and we do find we're seeing more straight through on partnerships, I would say, where they're a bit more trained. And the D2C, we do need to call it Bob a few quotes for sure.
We've been focusing a lot on Canada because obviously that's where we're from. But you mentioned the US a couple of times, so maybe, and we do have US viewers. So maybe you can just give us a quick bit on your US expansion plans.
Yeah, thanks, Tom. And it's been really cool to be part of a North American organization. And I kind of mentioned before, first transnational kind of small business provider out there. So right now we're live in 8 states with our platform on admitted product, but we're really excited. Hopefully when this goes live, we're going to be in 20 states. So definitely a big push is in the US. The Canadian business is always going to be our baby and where we grow. We're a Canadian company, but we're also a US organization. So we have a head office in the States in Charlotte. It's a great place to be. It's a great little tech hub. And our plans are definitely to grow in the US market. And towards the end of the year, hitting up some of the big 4 states, right? So if we think about Florida, Texas, New York, and California, a lot of growth opportunity, a lot of interesting agent partnerships, and a lot of interesting enterprise partnerships to be found.
Cool. Josh, you mentioned earlier that you're seeing sort of more adoption on the consumer side as well as potentially on the carrier side of connectivity in the US versus Canada. Why do you think Canada is lagging the US in terms of connectivity?
Is it officially? Is it? Are we starting with that baseline?
I don't think that. I don't think that's true. I think Josh mentioned that people are binding online, but I would go toe to toe with anybody in the U.S. for what we're doing in Canada. It's my opinion, but Josh, you tell us.
So I think a toe to toe in terms of like digital brokering or offering that experience, we are there in Canada. I would say the more carrier integration, working with aggregators and wholesalers is more advanced in the US, just based off if we look at some of the wholesale aggregators for agencies, call it like a Bold Penguin, Bolt, or Appalachian, they have networks of 10,000 agents that are relying on their software to plug in to have 5 product quotes on small commercial. They've integrated through APIs with all those carriers or MGAs. I don't think we're there yet in Canada. I know we're building it, and Adam, looking at you with Quoti, we have Calify out in Alberta. I think we're starting to get there, but I would say it's a little bit further along on that side of the house. I think it's going to happen. It just might not happen with every carrier, right? So if you see some starting to exit in certain realms like small business or areas of personal insurance, but if you're serious about a product line, you have to create your APIs. You need to be able to integrate and provide, brokers the ability to have the digital experience that they need to fulfill with customers. And then on an enterprise side, you would need to be able to plug in and start to embed offerings to really advance your game. And that has to happen through open API connectivity.
Now you're singing from our songbook there. So just for the record, I was talking about carrier to broker connectivity, not Digital Brokers Canada versus Digital Brokers US. It was more about the connectivity side. So come back to my question. Why do you think, in terms of carrier connectivity, why do you think the US is ahead of us in Canada, Josh?
It's a good question. I think maybe there's the customer need that is demanding it. So it allows for a carrier or insurer to up their game and be there when they need to be. And it's a fear of missing out, right? So the first one goes, then those follow. We haven't quite seen that yet in Canada, where like major insurance carriers have opened up API access, right? We haven't.
All right, let's switch gears here for a second. Let's talk about e-commerce, right? Obviously something that's been on the upswing for the last decade plus, and definitely throughout the pandemic. So, why don't you talk to us about what's going on there, Josh? Because I think we're all aware that when there's a whole bunch of people who don't know what they're doing from an insurance perspective, starting businesses, there's potential issues down the road. So why don't you fill us in there and what you guys are doing to respond to it?
Sure. Yeah. I think the e-commerce business is like super interesting. We spent a lot of time researching it and understanding it. I pulled up a couple of stats, but 35 billion in e-commerce sales in 2021 in Canada, 870 billion in e-commerce sales in the US. So massive amounts of growth in that industry. And I think what that brings in is a new market for insurance. So the penny really dropped on this one when the Amazon US started to require their marketplace sellers to obtain 1 to 2 million liability, and some insuretech started to enter in and be able to provide that experience digitally end to end. So we saw the opportunity to really be the first one in Canada to have that true end-to-end online experience for e-commerce. And the second piece is we identified a bit of a product need in that there were a lot of Canadian product offerings out there for Amazon sellers, but it didn't necessarily satisfy their sales in the US. So anytime you breached, call it 25% of sales in the US, your premiums would, go tenfold. So I think the first policy that we sold was someone who had 95% US sales. They had a $13,000 premium, and we were able to insure them for a couple grand at a decent sized revenue. And I think that's the power of bringing in this transnational experience and working with a global reinsurer, is that they understand the book, but an Amazon seller in the US versus an Amazon seller in Canada, the fact that they sell in both, should it warrant 10 times the premium? Probably not, right? So I think that's where we're seeing some early growth, but some definite excitement in the market.
One of the things, as we hear about the e-commerce, embedded insurance, and products, white label on my website, digital products, I'm always, as a bit of an older broker, where's the E&O lie? Like who's picking up that exposure when it's bought online under you, but they came in through my site? Has there been any, have you had any E&O losses that landed in your lap versus the brokers? Like, is there an agreement contractually that way? So if I plug you in and you're selling the product, but they're landing on my site to get it, like when they didn't declare and they conveniently forget about some sort of operation that they have and fingers are pointed, where does that go?
Yeah, I would say there's like multiple different ways to answer that. First of all, it'd be the kind of broker of record. So if you were writing our e-commerce product, you would have a contract with us that stated you would provide that coverage and that option to the consumer. So that would probably fall on the broker of record. If it was a Foxquilt D2C, for instance, that would fall on our own organization and our own E&O. And then there are some controls in place, that attestations that need to be answered by customers that fulfill online, because that is a real concern to ensure that these e-commerce merchants are getting the coverage they need, but they are stating all of the different products that they're selling, so that at the time of claim we can respond and there's no misrepresentation. So hope that answers it. But I would say whoever's selling the product, so if we were working with you on a solution, you'd be broker of record. You would probably still have to fulfill a lot of those customers through an assisted bind, for instance, which would then transfer that to your end, versus if we wrote it alone, it would be on us.
Okay, because that generally is a big concern with any kind of buy quote online with commercial lines is a lot more complicated, right?
Yeah. And I think that it also comes down to streamlined and simplicity of product too, right? So when you talk about a product's liability or a GL for something like e-commerce, it's pretty defined. It's it states exactly what's covered, but there needs to be an education and awareness for what these customers need and what we can fulfill online through our products. But if they need certain additions, like they have a massive cyber exposure, we should be able to offer that as well, right? So it's not just a stock product. There could be additions as well that need to be offered as part of our servicing of those.
Yeah. One of the challenges we have in rural areas is people are doing multiple things. So, you know, I have a B&B, I do welding, and I drive Uber or whatever. You know, like they do it all. How do you cover that?
Yeah, it's that one thing we are trying to do is tackle part of that problem. So we call it multi-ISO rating or multi-operational rating. I'd say it's a bit more suited towards our contractor product right now, but you have a lot of contractors that do multiple different defined exposures. So they could be an electrician, they could be a plumber, they could also then do lawn care. So how do you make sure that you rate that policy accordingly?
You built the Fox Den, and you've got that incredible tech stack with the APIs, and everybody's talking about the buzzword like it used to be. There's always the different buzzwords that come out, but now it's embedded insurance. That seems to be the one. I want to get Foxquilts, your spin on the embedded insurance. What does it look like? Where is it going to go?
So, I think embedded is kind of that term that's out there, especially in the insuretech world. And I think what's good about it is there's variations of embedded, right? So you can start at the basics. How do we embed ourselves into a customer journey for purchasing? So if you think about, a basic partnership example, we're working with a cleaning program. So it's an online supply and demand matchup. There's someone online that's built a platform to satisfy people requiring cleaning services. When they sign up cleaners, those are classified as subcontractors. And in order to do business with them, they require certificates. So, for a small business owner who's providing that platform, insurance could end up being 25% of their operation because they're chasing certificates, they're following up. So embedding yourself into that offering and partnering with organizations to alleviate the insurance concerns, right, by providing full quote issue bind functionality, automated certificates, that would be like your basic level of embedded that I think is achievable by a lot of different insurance distribution arms, including insuretechs, including digital brokers, to just alleviate some of the pain points. And then it gets a little bit more interesting when we talk about embedding fully into an offering, right? So you don't want a customer to ever leave the funnel of where they are. So if they're within Wayfair and they're signing up to be a merchant or seller, they should never leave Wayfair. And as part of them signing up and as part of their fees, the Excalibur price is displayed or the Foxquilt price is displayed. And they don't leave that. They get a certificate issued automatically. That would be more of like a true embedded. And then I think what we're seeing now, some businesses that are just basing their entire business model off it, like a Cover Genius, where they're doing deals with Ryanair and travel insurance, for instance, or a Tesla that's testing out the market there. What's funny is it seems to always come back though to an insurance professional or an insurance arm to distribute, which is encouraging because I think it's needed.
But the pricing is kind of a big thing, as you saw by the stocks. I think Matt Carbarno, I don't know if you saw it today, but he released how well Lemonade's doing in terms of 90% loss ratio, 167% combined ratio. It's one thing to embed it and do that, but at the end of the day, you still have to make a profit, and it's got to be profitable.
I think it has taught us that as a growth company, you have to scale responsibly, right? So as you raise your rounds, you need to make sure you're investing in multiple different arms, right? Your technology, your product, but also importantly, your underwriting and profitability. So working with your partners who may be providing capacity, or if you're doing it on your own end, to make sure that you're always protecting your bottom line, because we've all lived it in terms of that cyclical flow, or if you always go hyper growth, that earn loss ratio, it's going to catch up. And I think that's what we're seeing with some insuretechs and some insuretechs on lines of business that have traditionally been underperforming, like condo insurance or personal auto. You have to be really careful how you scale and make sure you're always protecting the bottom line. So those are some learnings that we're seeing and taking. It's that responsible scale with good growth, but making sure you're taking it seriously in terms of your bottom line.
I have a bit of an ad hoc question
Sure.
on here. If we gave you a magic wand and said, with your Foxquilt hat on, in the industry, what would you have the industry start doing as a whole? What would you have the industry stop doing? And what do you want to see it keep doing in a continued sort of deepening?
I guess start doing, I think, would be releasing more technology into consumers' hands, because some of the feedback that we are getting is the experience and the ease of purchasing your policy. And we're seeing that in direct to consumer, we're seeing that in partnerships, and we're seeing that with brokers as well when they have quote issue bind technology. So keep pushing that, especially for products that make sense to be sold online. So I mentioned it earlier. I think there needs to be, more insuretechs, more digital brokers to continue that evolution and push, because we've seen it. Other industries have evolved quicker than insurance, and it's important that we continue to release tech in the hands of Canadian and American consumers. So that's one. I'd say stop doing. I think we apologize a little bit too much, and maybe that's a Canadian piece, but apologizing for what we're doing or trying to push. I think it's important that we're confident in what we're doing in terms of bringing technology to the forefront of the buying cycle for insurance. So we got to stop apologizing so much and continue doing. I think it's really important that we continue to educate the consumer, right? So if we bring in more tech forward solutions, the consumer is only as good as what they know. So it's really important that message is brought forward, educating consumers on why e-commerce insurance liability is necessary to be a merchant or seller on Amazon or Etsy, educating brokers on how to bring technology into their office by partnering with companies like Foxquilt. So I think education is super important and needs to continue.
So Josh, our listeners, we're starting to dial in on who they are, and a bunch of them are average brokers, in the 5 to 50 or higher million range. And then we have a whole bunch of insurers that watch us too. So I have two questions. Number one, on the broker side, who do you want to hear from? Like, that you could give opportunity to. And on the insurer side, just tell us whose lunch are you coming to eat?
I think on the broker side, we're looking to hear from real partners that want to work with us on distributing streamlined product in small business, right? So if you have a book, or if you have a marketing angle or program or need within a streamlined small business insurance product that you can fulfill digitally with your customer base, you should be talking to us to see if there's opportunity. And the carrier piece, I'm not going to name names, but it would be if we're going after carriers that aren't evolving product or technology in the small business space, right? So if you're still relying on BOP or policy packs or adding on way too many frills to a policy to get to an average premium of $1,700 in small commercial, I would say that's probably who we're going after, because based on competitor research, based on the real needs of some of these small business owners that just can't afford it, right? That's what we're trying to do. We're trying to give small business owners the ability to obtain these insurance policies, do it online, and not break the bank while doing so.
So what's next?
Yeah, so the journey's been really fun. I love being part of an insuretech, a growth company. I kind of joke with the fact that I think it's been 8-9 months, but it's felt like 2.5 years. So that's in a good way. It's in a good way.
Welcome to this side of insurance distribution.
Or maybe it's just this side, right? I know, coming from a carrier. But I'd say there's a couple things. So one, increasing our product, our product roadmap. So we do have some plans to release new product throughout the end of this year and into next. Extending towards a really good, sound professional liability product. We see a lot of need for that in the small business space. Hospitality has a big need, to actually fulfill and buy online for hospitality has been a difficult class. But again, small business owners that have been hit really hard, right? So how can we bring something that's good and ready and a strong product? I'd say the second piece is UX UI. So when I first came on board, our journey was pretty good. It was a little clunky at times, and we focused a ton of investment and effort on user experience and user interface. So that's I'd say before we used to put that on a roadmap as once a quarter. Now it's a full team just dedicated to it. So where people are getting stuck or feedback we're getting with brokers on a beta basis to build a platform, we think UX UI is super invaluable and important. And the last piece is on expanding our distribution, right? We're a growth company. We want to scale, and we see the biggest benefit in enterprise B2B partnerships and our broker, agent, and wholesale network. So hoping to work with some of you guys to push that out for sure.
Is retention important to your brokerage? Of course it is. That's why at IFS, we have a cancellation prevention process. Want more details? Give us a call. I know you don't always use a premium finance company, but when you do, you should use IFS. Cheers.